Have a look at all these trades. Did you notice something? No. Then, let's look at all of them side by side. First, let's look at long trades only. Now, did you notice something? Look. Every single one of them follows the same pattern. Similarly, let's take a look at the short trades. Now you can see the pattern, right? Over here, every single trade follows the same pattern. This is one of my favorite patterns, and I call it the step and boom pattern. I have been trading this pattern for the last 40 years, and today I am going to share it with everyone. Before we begin with the setup, let's analyze this pattern. First up, we have a consolidation phase. As you can see, this is the consolidation phase. Then there has to be a breakout or a breakdown of the consolidation phase. Soon after, we need the market to enter into a second consolidation phase, which is what I call a step, and once we have a breakout or breakdown of this second consolidation phase, the market goes boom in our direction. Hence, I have named the pattern the step and boom pattern. Now, you may say that instead of the market going in our direction, it may reverse and hit our stop loss. To tell you the truth, this will happen, which is why we need to analyze the volume at our step or consolidation phase. Basically, we need high volume activity at our consolidation. I know a lot of people will say that it is impossible to analyze the volume while in the live market. Which is why I will be adding one indicator to this setup. It's called the volume divergence, or VolDiv in short. Go to the indicators tab and add a search of VolDiv, select this one and add it. Now, in the setting, change the 3 to 7. We will turn on the true range and turn off the show info label, and change the strong positive color to blue. I won't explain what this indicator is or what it does in this video. If you want to know more, let me know in the comments, and I will make a separate explanation video. For now, all you need to know is that when the indicator is blue, it means there is high volume activity, and that is all we will see. Now, let's get back to the setup. The first step is to wait for the volume divergence indicator to turn blue. Once it is blue, either check whether the first consolidation has already occurred or is currently in progress. Once we have a consolidation phase, then let it either break out or break down. Now the next step is to wait for the second consolidation. At this second consolidation phase, once we have a breakout, we will enter the trade with the nearest swing low or high as our stop loss. And that's for our setup. If you look closely, once the two steps or consolidations form, the prices move rapidly. This is because the big plates have already made their moves while the market looks flat. And this is exactly what the VolDiv indicator tells us. Now let's look at a few examples. In this first example, you can see here the volume divergence indicator turned blue. Here we can see a small consolidation phase. Then a breakout happened, and it entered into the second consolidation phase, which is our step. As soon as the price breaks out of the second consolidation phase, we enter a long trade, and boom. We get a profitable trade. In this second example, you can see that the volume divergence indicator turned blue. Here we can see a small consolidation phase. Then a breakout happened, and it entered into the second consolidation phase, which is our step. As soon as the price breaks out of the second consolidation phase, we enter a long trade, and boom. We get a profitable trade. In this third example, you can see that the volume divergence indicator turned blue. Here we can see a small consolidation phase. Then a breakdown happened, and it entered into the second consolidation phase, which is our step. As soon as the price breaks out of the second consolidation phase, we enter a short trade, and boom. We get a profitable trade. In this fourth example, you can see that the volume divergence indicator turned blue. Here we can see a small consolidation phase. Then a breakdown happened, and it entered into the second consolidation phase, which is our step. As soon as the price breaks out of the second consolidation phase, we enter a short trade, and boom, we get a profitable trade. Look, this isn't some magic pattern. It's simple, almost boring. And that's exactly why it works. Most traders lose money because they're chasing excitement, indicators, signals, constant trades. This does the opposite. You wait. You let the market show its hand, and then you hit it when it's ready to move. That step phase? That's where the big traders enter. That boom? That's where the move actually begins. If you can train yourself to just sit through the noise and only take this setup, you don't need 10 strategies. One is enough. Backtest it. Watch it live. Don't rush it. And when you start seeing it form in real time, you'll know exactly what's coming next. That's it. Let me know in the comment section if you have any doubts. And finally, if you like this video, then please hit the like button and subscribe.